Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here for a British Pound US Dollar Forex market analysis for February 1st through the 5th, 2021. We have our disclaimer pulled up here just to remind you that this webinar is for illustrative and educational purposes only, and also please remember to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. So without further ado, let's get into the meat and potatoes of why you're here. We have the British Pound US Dollar. What's going on here? Well, last week it's been buffering under these highs. It's set a higher move high. This actually happens to be a sell signal here. We have a dark cloud cover sell signal that had occurred. A dark cloud cover is a high probable Japanese candlestick pattern. So dark cloud cover sell signal. Okay. All right. So where does that have us targeting? Well, right now we're looking to get down into this target zone here, right around $1.34 to $1.34.37, down to $1.33.63. This is our downside target area. We are looking for this to occur over the next probably 1 to 4 weeks. The pound is very resilient and strong as a bull right now, but its slope is pretty steep. So the key pivot here is this current high set last week at $1.3758. All trading above there, even if it's just minor, which it probably will be, as it's been making highs, it's running out of gas. It's just poking highs. And I think one of the main reasons for that is we are in post-Brexit. The good thing is going for the UK and the pound is that they don't have to support the EU. They will be trading with the EU, but since they have left the EU, they are no longer obligated to donate all kinds of funds to bail out all these countries. Like Italy is collapsing and Germany has to pay for it. So this is something that's giving a little strength to the pound in post-Brexit action because the euro is getting, it's under pressure because of these things. And also, you got to remember, there's a commodity inflation going on across the board where things such as oil and other things that the UK actually either produces or has control over globally in global production, that's helping to give support to the pound in the short run. So where the dollar bulls are starting to wreak havoc in a lot of currencies, they're having a tough time with the pound, and I think it's mostly commodity driven and post-Brexit driven because there's no reason to be such a bear on the pound because they've done all the right moves with that. However, coronavirus lockdowns and some other things are causing some issues. I would think that you're probably going to see a reversal of tunes going on with that too in the UK because there was a meeting last week between Boris Johnson and two major UK medical directors and another science director for the UK. And it was all about COVID-19 and the handling of it over the past year, and with certain new findings that they had been staunch against. So it's going to be hard for them to save face when they've been so adamant against certain things. We'll see how that pans out. I don't know if that's really going to impact the currency trade with the pound, but it may help to open things up faster than later, and that's where I think why you think you're going to have a sideways trade. However, we do have this sell signal. So key off of that high right there, and then also this low that was set last week. Any failure from this would confirm lower move lows, which would make us a short-term bear. Okay, so now just like we have this arrow here that goes up to that. Now this is another key level. So if we take out this low at $1.3608, we will be leaning on $1.3524. This is a key pivot level. That's why it's marked $1.3758, $1.3524. They're going to contain this market's trading for the next probably 1 to 2 weeks. A breach of resistance to the upside confirms strength. Remember, the market's been making higher move highs and higher move lows. It is still in a bull market. Right now we have a short-term sell rally forecast. If you look at the hourly, we actually have a sell signal that has gone on yes, it was in the middle of Friday's trade in the during the U.S. session, and it was right here. So right now the market, as it ended the last trading hours of the week, while the U.S. was open and the other markets had closed, this one started to fall apart. It's a short-term hourly sell signal that is complementing a short-term daily sell signal. Now Now, these are counter trend trades. This is a bull market, so we're not trying to call a top. What we are calling right now is for a short-term correction, and we are looking for a test of support down to $1.3608. Should we do that and it fails here, that would confirm a lower move low after a higher move high. That would take us off the short-term bull path. Long-term, medium-term, we are bullish to pound US dollar right now. But we are now seeing a short-term shift on the hourly and the daily, giving us a reason to think that support will be tested more than resistance will be challenged. A failure to $1.3608 then would have us leaning towards this next key pivot at $1.3524. Obviously, taking out $35.24 would have us then leaning on our downside target area. These are some key levels. We'll probably bounce off them first before we start to see any type of upside movement. So right now, let's see if we can get lower move lows, because right now we are confirmed neutral short run. Short run on the daily, we made a higher move high after a, we made a higher move high. We're looking to make a higher move low. Okay, so until we do that, we can't confirm anything. But right now, we have had a higher move high with a higher move low and then a lower move high. Now with hourly confirming pressure, with that follow through, if that happens to occur when the European markets open up, that will help probably gain a lot of selling momentum. I would expect that your weak longs are going to be tested, and the weak longs will probably be stopped out, adding to selling pressure. And then, like I said, if that starts to build, well, then we'll see how that pans out. But right now, we are a short-term bear. We're a long-term bull for the pound versus the dollar, but definitely in the short one, we're bearish. Real quick, we're going to look at the dollar index. Dollar index is bullish. If you see the dollar index breach this 90.97 area, that means that the pound and the euro most likely are under pressure, just because they're the heaviest weights in the dollar index. Now, the dollar index is a short-term bull. Overall, it's a medium and long-term bear. So that goes that coincides with our British pound US dollar long-term and medium-term forecast, meaning we're dollar bears. But in the short room, on the daily and the hourly, we are looking for a little challenge of our test of support. So another reason this dark cloud cover sell signal here, this is one of our high probable Japanese candlestick patterns. So that gives us every reason to think that the short-term short, no pun intended, is going to help us definitely to make a test and a run at support. So remember, if you want to learn how to trade that signal, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, and also subscribe to our YouTube channel, Forex Trading Unlocked, and also go to our website, forex-trading-unlocked.com. And if you do, you can also get a snippet on the book High Probable Japanese Candlestick Patterns to read. So with that being said, good luck in the trading week ahead. We hope that this has been helpful. Always check out forex-trading-unlocked.com for all of your